Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for Wednesday, May 26th. I'm your host, Jesse Allen. Great to have you here with us for another day of talking about the markets here. Find us online, markettalkag.com. That is our home on the web, markettalkag.com. Our YouTube channels there, all of our streaming sources, everything is available, markettalkag.com. Well, we come back in here today. We start off thinking, oh no, here we go again with more selling pressure, and then we turn it around. It's a wild market environment. Let's bring in our good friend John Heinberg with Total Farm Marketing joining us here on this Wednesday. We moved John up a day, and good day for you and me to talk, John, because this market we're dealing with right now, it almost just makes us shake our head a little bit, my friend.
It's been an aggressive couple of weeks, that's for sure, and that's about the best word I got to describe it, because you just see so many swings, so much movement. That joy of volatility that we love to have in this market, provides opportunity and also causes pain. We were chatting a little bit about beforehand, and it's a different market now than when it was 5, 10, even years ago. We got different types of players in this marketplace, and yesterday really didn't have a lot of news. And again, you look at just what's probably happening. You got technical sellers, you have momentum traders, you got those small hedge funds or the speculators, jumping in and out of this market very, very quickly. And yesterday was a washout day. We just saw money quickly moving to the sidelines. The stops are breaking. I mean, when you drop 20 plus cents in a half an hour on corn or beans, you can just tell that's what's going on. Now today, here we had some follow through selling, probably covering some margins, things of that nature this morning. Prices went down just short of $6 in July corn, $5 in December corn, and those prices got rejected very, very quickly. And basically, we put a nice turn in on the corn market today. Not saying we're out of the woods here, because the selling pressure can come right back. But it sure felt like today that those levels that we hit, put in a really pretty good short-term low. I'm actually looking for some type of recovery in here on that corn market. Like to see beans hold on to their reversals when they had them today, so I'm still a little more cautious there overall. But that was a pretty quick turn off those lows today in both that corn and soybean markets.
John, before we get too deep into any one commodity, I just love your thoughts on this. I had quite a few friends, producers, reach out to me yesterday, texting me on Twitter, whatnot. They were wondering what's going on. I don't understand what's going on with these markets right now, and even some of that still this morning. How many of those questions did you field in the last 48 hours from your clients or producers reaching out, just wondering what is happening here with all of this going, all of these market players that you mentioned, and all the different factors that are making this a new market environment?
Yeah, I fielded that a couple times yesterday, and actually for our afternoon newsletter, I kind of covered that in what we call our marketplace overview section. And, it is a different market. We don't have the pits anymore. There's no human element per se in here. Back in the older days, there'd be two guys sitting in a pit watching prices drop, realizing that the fundamentals don't merit the price, and be stepping in and, buying the market and lifting it or whatever they needed to do. Now, the thing is that as much as we loved going to $7 plus corn in May, and, that was driven by that same type of players that pushed the momentum in the market. It's going to hurt when we get days like, or weeks like these last 2 weeks. The same thing is coming into play. Again, you got traders that are sitting by a computer. You got logarithms with math equations that are trading off of headlines they see in the news. We had a little bit of buzz this morning on corn that China was making some cancellations on old crop corn contracts. Never got anything to confirm it. To me, it looked like somebody just sat down at a Twitter line and typed it up and hit send. but that's what the computers read and that's what they trade off of. So maybe that was the big push we had late in the afternoon from some industry sources. Now we'll see if those get confirmed, but we had talk that China was buying corn today and maybe even bought some old crop corn today. So, we'll see. And again, it makes it very, very difficult for producers, especially, you wake up in the morning, you look at the market, you're down 20 cents on corn again or 20 on beans. And then by the time you got done with your morning coffee and got going on the tractor, we're 7 cents higher. It's how quick it moves. So, again, with that, how do you handle that volatility? You find your targets, you put positions in, you let the market work. Watch the longer term trends. What happens on a weekly chart? Okay. What happens on a monthly chart? When we got to $7 plus, even though we thought maybe we were going higher, that was a historical value. Now with this hard sell off, you look at the fundamentals, now maybe we're getting cheap here again, especially beans. So, it's a lot of different things going in, and you kind of got to close your eyes to it a little bit as a producer and just say, stay disciplined, look at where you're at. If you're still selling corn here, if you're behind and you move some today at 520 compared to the last 3-4 years, darn, that's a good price. And then use those option tools and things like that if you want to stay in the market. I bought a lot out of the money corn calls today with the intent that if we get some strength in December corn, they're going to go ahead and pull the trigger and move some sales. And we got something in back at $6, $6.50 over top, just in case the summer gets crazy again. But otherwise, we're building a good base, and we want to make sure we got those sales in.
Well, and that's great you mentioned that. And I know earlier you mentioned, a nice reversal in this corn market today, maybe putting in a low here possibly, and maybe start to size up our range a little bit. We start looking at those fundamentals. You mentioned them: Chinese demand, a short Brazilian crop getting shorter. A lot of folks are the big money bets kind of on, the U.S. providing that large corn crop to offset that. But then again, we're looking at weather, and it seems that we don't normally talk about weather being a huge factor on May 26th, but it just seems like this has been a weather market. And it's been a South American weather market. And now all of a sudden we're talking more of a U.S. weather market on this side, just with the talk of maybe some peripheral corn acres going in parts of the Dakotas or wherever, and just the drought and the shortness of the subsoil moisture. So, looking at this corn market, you mentioned a nice reversal today, looking at the low, me getting to my point here. What are you feeling with this corn market, where we're at right now? Do you think we could see some buying in, or at least can we settle into a range after a sharp correction?
I'm hoping that's the case. Again, one day doesn't make a turn. But, when you come in today and I'm looking at December corn down to $5, finishing the day at 520, up 5 cents, top of the trading range, that usually opens the door technically for some follow through. We'll see if we can get there. We do have some overhead resistance on some moving averages that could keep us in place. We do have export sales numbers coming out tomorrow. We'll have to watch what happens there. Same thing with even July corn. There's one thing I'm still watching in that July corn market, and that's the cash market. We got an ethanol report today that showed ethanol stocks at a 4-year low. Okay. One client I talked today says the ethanol plant was extremely busy taking corn in today, and I'm assuming they must have pulled their June contracts forward just to get supplies going. Ethanol prices have continued to climb, and realistically, that's a great chart to take a look at, ethanol versus corn. In terms of price, they've been moving step for step until these last couple of weeks. Ethanol continues to climb, and corn has plummeted. So there's a divergence there that might need to get filled up. So when I look at the cash market, what's going on with the basis, the talk of the vessels needing to be filled in the Gulf to get old crop corn to China, it felt like we overdid it, especially with the push hard this morning. So we'll see if we did get a reversal in. I'm targeting we move things back up here another 20, 30 cents is a very good possibility. Maybe, like you said, getting into a range. We now know where our top is. We know where our bottom could be. Now we start trading in the middle till we find out what those acres really are going to be come the end of June.
Now on the soybean side, you mentioned maybe getting a little cheap on soybeans here, possibly. Looking at these soybean prices right now, we've shifted a lot of our discussion to corn the last few weeks as soybean demand has kind of backed off and shifted to South America. But looking at soybean prices here, we're still very, very strong. I look at November beans down just a quarter penny today, 13.47. I mean, that, I know we're still got a few worries in this market, but this soybean market really does seem strong. And, the talk is out there that we're going to, possibly up corn acres and might not up bean acres that much because we can't find them, So it feels to me like the soybean market maybe got some sleeper strength to it.
I think so. I think we kind of forgot about it for a while. Realistically, fundamentally, that's the market that needs the buying support in it. And, with prices being down where we are after the sell-off here recently, it looks like a value to me. Now, again, didn't quite hold out like I hope we would, especially on that old crop beans today, but we still got off those lows very, very nicely and very quickly today. But we're still talking carryover at, 100 million bushels on old, 120 million bushels or 140 million bushels on new. That's expecting a perfect crop of basically, near 51 bushels to the acre this summer. Kind of in the good luck with that camp, at this time frame. Obviously it can happen if weather continues to be friendly. We may get there, but the demand still continues to be good. And the last 2 weeks, like you just kind of said, we've been talking about corn acres, China buying corn, corn basis, shipping corn, ethanol going, and we kind of forgot all about this bean market. So to me, it's turning into a bit of a sleeper. I was a buyer again of calls today for November beans, with the thought of guys looking to target sales on any strength here. Let's make sure we get that base built, get some out of the money calls in to protect the summer. And, at the same time, too, don't forget about, having something out there as a flyer over row crop sales. Just don't put a lot of risk into it. But, we know that this bean market can throw a dollar into it really fast. And, we want to be prepared for that. So it's going to be interesting to see. And the last little point, like you said, if we go ahead and plant 94, 95 million acres of corn, or we saw that one estimate up to 96, 97, that's going to be at the expense of those bean acres. So we need 90. Okay, that's the minimum in most traders' minds for us to have a supply that's got a chance to be, supportive, or at least, get us through comfortably. And right now we're at 87.6 according to the USDA. So we got some work to do there. And now we got to watch what the weather does in those northern plains. It picked up a little moisture. That's kind of weighed on the market this week. They're not out of this drought by any stretch of the imagination up there. We got a little rain to help out short term, but long term's not there. You look at that drought monitor map, look at the guys in northern Minnesota. Things are starting to move a little bit more east. That's becoming a concern point. There's a lot of corn and bean acres up in that region that we're going to count on good yields from, and I'm not sure we're going to get the start that we need for that crop. So, again, to me, it does look undervalued. Again, it looks like we kind of forgot about it. We'll probably get export sales numbers. Aren't going to be the best tomorrow. That's probably why July didn't get much of a bid today. So we'll have to see how that kind of shakes out. But I think between now and the next, 3-4 months, that bean market's going to be one that's a sleeper. Last little wrinkle on it, look what's happened to soybean meal. We had talked just a month ago of producers not being able to source supplies, and now bean meal's dropped $70 a ton off the high to today's low. So obviously I'm making recommendations to cover supplies here in this window. To me, that market's been the backside of the soybean oil market, buy oil, sell meal, and it might be time we see that turn around. And when, oil-led rallies are nice, but the meal-led rally is what really can push beans.
Very, very true. Great point there on soybeans with meal, watching that market, and we'll have to see what happens moving forward. I think June 30th, that acreage report, we're a little over a month away from that now. I think as we get closer to that, we're going to have more of an idea of weather, and we're really going to be shaping up for, I think, another fireworks report on June 30th, John.
Definitely. And, and even look at the corn bean ratio in the last couple of weeks. That thing's been flying all over the map. And now it's shifted back friendly for corn, because of the price move in beans this week. I know it's obviously late to be thinking about planting, but this market wants to buy those last few acres that might be floating around out there. I mean, I don't sense that making any changes, but it's just really unique to see how those prices have just been bouncing back and forth. Again, that's probably a sign of an atypically traded market by people who are not normally in the grain markets. They're just using those two as tools against each other, and obviously causing those types of movements.
John, real briefly on the wheat market, I know we have pressure there, more rain moving into hard and soft red wheat areas here this week. Obviously, looking at the wheat picture, it's a different story than corn of beans. We got a plentiful world supply, wheat moving into the feed bunks. We've talked a lot of these stories, but what are you seeing in this wheat market? Anything for producers to get excited about here this week?
Well, we got to keep an eye on the weather. Obviously that weighed on the spring wheat market. We had the Kansas wheat tour come through last week, came in above expectations there. So that's weighing on the KC market, kind of trying to hold some key supports here. So we really needed to kind of dig its heels. Then even globally, you're not sure where Russian wheat is in there with its tax situation, and global prices kind of a bit on the slides. Again, wheat was of the three grains, the one that had the best fundamental story in terms of supplies available. That's going to keep prices pressured. So now it's going to come down to where does the actual production come into play. Now we got a lot of rain against the southern plains. Does that start talking some quality concerns happening? So I know that's a little bit of buzz in the market. Maybe it's what gave KC a couple pennies over Chicago today. Obviously we talked about the northern plains. Yeah, we picked up some nice rain and it got a little more in the forecast. But those longer range forecasts are turning hotter and dry again. That spring wheat's still going to be a big factor. I mean, we saw crop conditions come in at 45% good to excellent. Obviously well below what the market was expecting and well below where we've been in the past. That's not a good spot for that crop to get started with a forecast turning warmer and drier.
John, let's move to livestock here before we run out of time. Cattle, we know the stories there with packer margins and everything else, and I know a lot of folks are it's maddening to them to see cutout values continue to go sharply higher, yet we can't, we're getting bids $1 lower than last week in feedlot country. I mean, slaughter speeds have ramped up somewhat, but this cattle market turned lower after grains turned back higher today. It just seems like cattle stuck in this rut, and until we probably sort out this packer margin issue, we might be stuck at this point, it seems like.
Yeah, I'm actually turning very negative on the cattle market, at least maybe for the short term here. I do not like the price action yesterday as well as today. We tried to get a little strength at the start of the day. It faded today, closing towards the bottom of the range. That August contract looks scary on the chart, like it wants to break and maybe put a few dollars behind us here. So I'm a little cautious about that. That's all because of the inability of the packers to get cattle into the system. Talking to producers right now, there's just no demand. The packers come out, they make a bid, get a few cattle traded, stay in 120, steady, that regard. But I have one client talk to me. He basically said he's got cattle now that he's starting to work here for June, and the packers said, we'll hold off till probably July. That's a little scary, especially when he's still feeding $6 corn to those animals. But that just kind of tells us what the system is. I mean, we're killing 120,000 head a day. Just to give you a comparison, last year with all the shutdowns for COVID, we on a year ago today, we had 107,000 head go through. So we're 13,000 head more than the COVID shutdown window. So that kind of tells you what's kind of going on the chain speed side of it. That's keeping those carcass values elevated, maybe artificially. Now, I am a little cautious there. We're through the Memorial Day buying window. Okay, now we're kind of pausing till the 4th of July. Choice carcasses were slightly lower at midday, still great value. But if we start seeing some turn a little bit in that regard, just because of the seasonality, typically cattle work sideways to lower until that June contract comes off the books at the end of June. So I'm a little cautious here. In fact, I'm defensive on that, the August contracts. Now, longer term, like the story, we're seeing a lot of beef cows go out of due to pasture conditions moving out. I still think, end of the year, 2022, we could have some real interesting price action because of the low cattle numbers overall.
And on the hog side of things, we continue to watch that story there, pushing new highs, pushing these levels higher and higher in these contracts for hogs, John. We were a little lower today, obviously, with the turnaround in grains, but to me, this hog market just seems like it's waiting for that last match, that last spark to send this even higher.
And we might get that tomorrow. Today felt like a little bit of profit taking before export sales numbers. The market's a little cautious that China might be starting to slow down some of their purchases. Obviously we broke to new highs on basically June through October contracts yesterday. So as I said, today it felt like we were just being a little bit safe going into that report tomorrow. So we'll have to see how that plays out. I'm still targeting possibly July or August up into that 130 window. So I still think there's some room for this to go, excuse me. But at the same time, fundamentals are saying, hey, this market wants to work higher. Retail carcasses for hogs right now took out last year's high. We're trading at record high in a totally different market system, all based on strong demand. So I like the hog market, maybe due for a little correction, but I think that turns into a buying opportunity.
John, any other final thoughts you have for us before we wrap it up today?
Again, just it's going to be crazy the next few days. Don't forget, we also got 3-day weekend with Memorial Day, and now we get into June, and we'll start shifting more focus into the summer weather patterns and crop condition reports. So those are all going to be coming at us. I'll tell you right now, this corn crop's going to get off to a good start. That's going to keep this market pretty choppy. Again, my big recommendation for producers: if you're light on sales, take strength. And here in these new crop positions, make sure you get some sales in, but then protect yourself for the long term.
John, if producers want to reach out to you and the team at Total Farm Marketing and get a little advice, you guys have a lot of great resources. What's the best way to do that?
Love to chat with them. Give me a call at 800-334-9779 or shoot me an email at jonh@totalfarmmarketing.com. And again, don't forget about that website, totalfarmmarketing.com. You'll find my bio there, plus a lot of great information.
John, appreciate the time. Thanks for jumping in on a Wednesday. Have a great rest of the week and a great Memorial Day weekend.
You too. And again, thanks for your time.
John Heinberg with Total Farm Marketing joining us here today on Market Talk, brought to you by Growmark FS. Find us online, markettalkag.com. This has been the Wednesday, May 26th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.